So our next question comes from E. E says, "Hey guys, I'm E. I'm 34 and I've lived well below my means for years, even in my camper van for 4 years. And I recently went all in on my career. I now earn $125,000 a year plus 20 to 30,000 in side hustle money. I discovered your podcast 6 months ago, so I joined public.com and I contribute 23,000 a year to my 401k, matches discretionary, maxed out a Roth IRA at 7,000. I bought a house this June. I owe 90,000 on the mortgage at a 6.5% interest rate with a $2,500 monthly payment. I also have a $95,000 family loan that I repay at $500 a month. My home has about $200,000 of equity, and I have a roommate. I've saved $60,000, and I want to split it between brokerage accounts, a high yield savings account, an emergency fund, and still invest in other fun things. So what is your recommendation for distributing that $60,000 between investing, high yield, and emergency cash given my current setup? I'm hoping to be financially independent by 55. Thank you for your guidance, E." Robert, what would you tell E to do with $60,000 in their situation?
I would tell E at 34 years old, I feel like you're too risk off. You're doing well. You're making good money. I would not do all just emergency fund, high yield savings because it's cash on top of cash on top of cash. I would have the emergency fund for sure, but I would probably look at being a little more risk on. You didn't mention having all the ETFs we talk about. You didn't mention cryptocurrency. You didn't mention some of these other sectors and investment strategies we talk about to make you more money. You're in an age where you can be a little more risk on, especially because you're a high earner. So for me, if I had $60,000 in your situation, I would look at a few things. I would maybe consider, but we don't have all the details, what to do with the $95,000 family loan. Is that something that benefits you by paying that down or paying it off? We don't have all the details. I would look at getting more diversified and getting some money into these brokerage accounts like we talk about, into the ETFs and index funds, and just really try to look at it from the perspective, what is your risk tolerance and what are you trying to accomplish? You said you wanted to be financially independent by 55 years old. Well, this is how I would start to do it rather than just having high yield savings, emergency fund, and, kind of sitting on the sidelines. But also, you say you want to invest this 1 to 1.5K a month. I think you should be investing more than that based on your current financial situation. So I would really hone in your debt to income ratio and figure out exactly how do you get to 15 to 20% of your net investable income into the strategies we talk about on the Rich Habits podcast.
I like that take, Robert. I do wish though that we had more information on this family loan at $95,000. Like I don't know what a $95,000 family loan is that you pay $500 a month to. So like let's say that you're like there's no interest and you're paying 500. That's going to take you 190 months, aka 16 years to pay off a family loan. Like, I don't know what that is. That kind of spooks me out, which makes me want to say like maybe half this money should go toward this family loan. Yeah, it's just weird, right? Because like, if you owe your mom $95,000 and then now you're investing, or maybe you go on a vacation and now your mom thinks you're not giving her money that she, it's a weird dynamic there. So I want more information on that, but take that out the picture. To your point, I agree. Get a 3-month emergency fund. Let's call it $15,000, then the rest of this, $45,000, can go into a bridge account that is invested in VOO, QQQ, VGT, VTI, all the things we talk about here. And then, this sort of $1,000 to $1,500 a month, I agree. I mean, if you're doing, call it $25,000 a year plus 125 of a salary, it's 150,000 pre-tax, 110, 115 after taxes and things like that. So, let's call it $8,000 a month. You're only investing 1,000 of your 8,000, and your monthly payment on your mortgage is $2,500. You didn't really mention anything else there. It's like, okay, cool. It's like, where's the other $5,500 a month going? I agree with Robert. I think you get a little bit more aggressive than just this $1,000 to $1,500 a month when it comes to like consistently investing. Try and hit that 15, 20, 25% range if you can, because that's the only way. You're the one here that says, I want to retire early. If you want to retire early, you have to really figure out how to increase your investing on a monthly basis, as well as perhaps decrease your monthly living expenses, which you've already figured out here with the van, living there 4 years ago. So long story short, I want to get this $95,000 family loan figured out, but assuming that is not that big of a deal and I'm looking too hard into it, let's get your bridge account rocking and rolling and ensure that you are on path to retire early by compounding.